Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey.
Mr. Marco, how are you, man?
Good, Mr. Felix. How are you?
Good.
What's
going on?
Good.
Excited?
Good day. Yeah.
We're
for
excited
sure.
for Powell tomorrow for Mr. Jerome Powell to talk.
Yeah.
So the I think the important thing is we're just going to start off with a little bit of macro bonds. Tomorrow Powell has to make a statement, right? He has to either protect the bonds or not protect the bonds, which not protecting means he just doesn't say anything. So the last time, if you recall, just 2 weeks ago, a week and a half ago, market was in free fall, up and down 3-4%. And the market was expecting him. The reason it did that was the market was expecting him to say something,
right?
Because bonds were down, right? Because the TLTs and bonds, they were down. Interest rates are rising. The media is picking up on inflation. Well, now we're right back to the same situation where now they're expecting, okay, he's not going to say anything there because he's going to say something when they speak in 2 weeks. So now we're here. The moment of truth is, 24 hours away, and he's got to either say something or not say something. Okay. And if he says something, it's what degrees does he use? Like how far does he go and say we're going to protect?
Right.
The problem, and so you have to decide, because if he says nothing, that's going to do something to the market. If he does say something, that's going to do something to the market. So you have to sort of put it all together and say, what would he do, or how's he going to do that? And then lay it out like an odds maker. If he does this, what does that do to the market? If he does this, what does that do to the market? I personally, my personal gut tells me that he's stuck because the market has just moved 6-7%. How is he going to make a statement saying that we got to protect everyone when the market's at the all-time highs? It sounds silly that he would do that, but who knows? I mean, the Fed has done sillier things. So I suspect that they don't say anything again, and they see how long they can ride this without having to raise interest rates at all. Just let the market raise its interest rates, and we'll see what happens. But if he doesn't say anything and just ignores the fact that the bond market's imploding, you could see the bonds trade off significantly again, and bonds imploding will have an effect, or at least should have an effect on the market. Now, the question is, will it have an effect tomorrow or the next day, Thursday, Friday? Remember, no matter what the news, if people are getting $150 billion in checks and $200 billion in checks, no matter what the news is, and they're just putting it into the market's going to hang in there, hang tough, maybe even go up, right? Doesn't really matter. And that's what we've been playing for the last call it a week and a half, is saying, like, this market seems like it could actually move. We can't discount 400, 405 on the SPYs. So we got to be aware of that. Now, week and a half later, the game has changed. We're at 397, 398. We're pushing that 400. The risk reward, you don't just now go, okay, you can go to 420, 440. You have to say, we were just at 372. We're now at 398. And the risk reward, when we had a bucket like this, when we were here, now it's flipped. Now the risk reward is actually flipped. Given our parameters, our framework that we built, 2 weeks ago, it's now flipped. And so you have to, that's part of doing the homework and part of what we're doing here to show, hey, just because the market's at 398, I'm not going to now go, the market can go to 440. The market's got to digest certain moves. And so our framework was 400, 405, maybe even 410. But now that's only 2% up versus it could easily go back to 380, 375. That's, going to be a 6% move down. So, the risk reward is changing. And so I think when we look at today's UOA and we start looking at things, we have to be in that mind frame of the risk reward is changing in the background. Also, Powell is speaking tomorrow. Okay, people are setting themselves up for, what if Powell says nothing? It just ignores it, and then all of a sudden people go, whoa, interest rates are actually moving higher again. Inflation is not really slowing down, and we got an economy still without much, not much help here. So you could see the market come back. You see what happened the last time it went from we were trading 383. It traded up 382, 383 about 2 weeks ago. And then the minute it didn't say anything, it dropped, and started trading 372. So, I'm not saying you're going to get the same reaction. I'm simply saying that we're framing that, we're doing the work here to frame what we should be looking at. And then within that frame, we're starting to take a look at individual names and take a look at individual trends and take a look at what could transpire. And then after that, we're trying to take a look at specific options to play or things that we think look interesting on a risk reward basis. Okay. Nice. So that's my 2 cents. I think if he doesn't say anything, bonds get hit. That's good for the banks, right? The banks like higher interest rates because they like a bigger yield curve, an interest, the net interest margin that they get from long-term and short-term bond rates. So the banks would do well. I think if he protects the bonds, everything explodes higher, right? Because interest rates would come in, bonds would go up, interest rates come in. That means fantasy stocks go way up. Everything is bid, and that's what you would expect. Okay.
Right.
That's one thing that I see. The other thing that I see is that the market is up. People are getting their checks. Some money's coming into the market. But did the powers that be, did the big money buy the market in anticipation of selling it to everyone coming in this week? Right? If you knew this week everybody was getting their money, okay, you could just simply say, okay, well, I know $150 billion is going to come in the next week, 8 days. I'm going to buy the market, start buying it here, take it all the way up because I'm going to sell it to all those people little by little as they come in during that week. And remember, there's still a whole tsunami of sales, potential sales in the 2 weeks after this week. Okay, that we got to make sure that we want to manage, and we want to, again, it's all framing the situation. With that said, let's look at some UOA. Let's see what we're looking at today. How about I do see some stuff in because I always look in like Las Vegas Sands and the casinos.
Nice. Yes. And you mentioned it yesterday, Las Vegas opening. We're seeing some
calls. It's the stocks. So these stocks, let's look at, this was a name, breaks my heart, this one. So the guy dies and then it goes up here. It's trading well. This clearly, I guess there's a lot of things I say, but one thing I say is you got to respect the V. Okay. You just got to respect the V. Whatever. When you see that, it should make, I don't care if it's this way. Okay. That's a V2. Like these are smaller Vs, but the bigger Vs, these, you just got to it's got to be in the back of your mind that there's a rejection here. I call it a rejection of price really quickly. Then it came down again really quickly, rejection of price. And it was doing its dance, but this was in the heart of what became a pandemic. Here, this is, rejection, and then it holds. Like it's still pretty strong. But it did have a very large move here. So, when I'm looking at this stuff, I'm interested because of this and seeing it hold and seeing what they're looking at. In the Las Vegas Sands, we can just go here, click on this. I just want to show you that we're seeing Las Vegas Sands and
MGM.
MGM. Is that what it is? Okay, so Las Vegas Sands. So now, the at the money implied vol is down here. Okay, so it looks like this would say it doesn't look like it's rah buying here, which to me it makes some sense just because it's had this large move off of, coming from the mid 40s up to 65. You probably have these 70 calls here look like they were for sale. Look like they came for sale. There was spreads with it looked like a much larger trade here, the 70s with the 75s, and probably something here in the Marches. 67s, they were for sale here. So it looks like they came in to sell the 67 and a halves, And then they came in also, it looks like long calls, and looks like they were selling these 75s. Although these look like they were spreads as well. So it looks like they were selling these Marches, selling the Marches,
Okay.
67.5 to close. And they were buying the April 70-75 call spread. Okay. Now, that to me is not super bullish, right? So I'm selling out my calls, which probably had a decent run because the stock went up here. And then I'm buying the 70-75 call spread for, let's call it $1. Sort of looks like a flip, like here's a buck, keep me in Las Vegas Sands, but I'm going to pare down my position. Right? Stock down, stock trading down, implied volatility down. So it looks like obviously stock trading down means it's more supply of stock. So stock selling in the name today overall. And you got this call spread that was bought here, but it looks like they were just getting out of the Marches. So again, someone getting out of Marches, flipping into a call spread, not super bullish, which makes sense with the backdrop of where we are in the world, right? Let's take a look here. So we had March of last year was right here. This is March. So this is, we're going back to sort of normal 67. Actually, you know what? Let's go back a little bit just to get a bigger view. All right. So three-year high on this thing is 73. We had this pandemic here, had this move straight down to 32. We're right back to 67. So we're literally trading right back to, this is a company, Las Vegas Sands, literally trading right back to the high range, let's call it 67 to 73. Not a lot of stock traded above 67. You see that?
Yep.
Right in here. There's just not a lot of stock trading up here. Okay, so 67, 73 range is this high range. We're back to 65. And I mean, Vegas hasn't really, it's open, but it's opening very differently than what it was in the past. So, again, something to think about. So someone might be saying, okay, if it continues to go up, I'm going to belong to 70, 75 call spread. But in the meantime, I'm getting the heck out of my stock.
Right.
You see that? I'm just going to manage my risk reward given where we are, where we just get, right? The backdrop we just talked about, right? We're up 6% in 2 weeks. That whole backdrop, looking at the backdrop of Las Vegas Sands, the news flow has been positive. Fine. I'm going to take that news flow. I'm going to get out of my stock, take this opportunity, pare down my position. Maybe not the whole thing, but I'm going to pare down my position and I'm just going to flip it into some dollar calls. And if it wants to do this huge move from 70 to 75, I'm still in there and I'm still playing the game.
Right.
Make sense?
Nice. Yep.
Good.
Yep.
Okay. So that would be the Las Vegas Sands. Let's take a look at the same thing you're going to see, I think, in MGM. Let's just take a look. MGM actually is trading in new highs. Okay. So this is brand new highs. Let's just go here. Brand new highs. Volume is decent here. So this is 75 million shares here. Okay, so I'd like to look a little bit more of the news here, but I'd like to know why MGM is trading. If I'm looking at this now, I'd like to know why MGM is trading through the highs here, and what's making it go through the highs. It might be that I think MGM's got some online stuff too, so that might be something to look at. I don't know. I'm guessing here, but I want to know what makes it so exciting that it's trading higher than where this is normal, right? This is normal for MGM. Okay. So I would like to, that's the question I have. What's making it worth more today than, during normal times after the pandemic? But if you look at MGM here today, we see similar things where there's a call spread. April 1st, stock down, supply out there. April 1st, someone is buying the 46 call spread for $1.
Yep.
There you go again. Just like throw $1 at it. If it keeps going up, great. But I'm getting out of my MGM stock here. Okay.
Great.
Good risk reward. Like that's how a hedge fund manager thinks. That's how big money managers think. I'm still in the game. If this thing wants to fly, fine. Powell wants to make a positive announcement, everything goes up huge, fine. I'll make a little bit of money there. I'm only risking $1. But you know what? I just made $20 over the last 4 months. I'm getting out of some MGM here.
Mm-hmm. Okay. All right.
All right.
Nice.
That leads to let's take a look at CCL, CCL NLH. Again, IV down here. You know, you have trades like this going up. You know, similar call spread here. It looks like call spread. And, you know, there's open interest. I don't know exactly what's going on, but I suspect people are taking profits here. It might be selling in both. It is a spread, but it might be. Let's see here. Looks like someone had a call spread, and it might just be someone taking off this call spread here. Okay, but people paring down their position in CCL. Why CCL? Let's take a look at CCL. Same type of look. We want to see. Again, I go through this each day. This whole framing things and everybody should find comfort in doing it however they want. But you know, for me, it works just to simply draw straight lines and have an idea of what's going on, right? In this case, we've done this over the last few weeks where this thing is climbing this wall of worry, and you know it's 12, 18, 24, call it 30. Okay, so you're going up in $6 increments here from $12, and what I see here is, okay, there's still a lot of room to go up here. This is normal. Call it 42 to 50 is about normal. I mean, you can even say the high is 66, but let's call it $50 is normal. We're at 30. So someone's going to say there's $20 more, but there's an article. I mean, I sent you this article that I saw this morning. Why don't you pull that article up just to look at it, give people an idea of what's.
All right. Let me pull it up. Here it is.
So I look at this, and by the way, I do get a lot of stuff from Zero Hedge, but I also get stuff from CNBC. Zero Hedge is my dose of negativity, and CNBC is my dose of positivity. So I want the rah-rah, and I also want the doomsday. But here's something that, you know, I take a look at, and I see, you know, Carnival CEO warns downturn to last 2 more years for cruise industry. This is an interesting article, right? You start hearing an executive from Carnival tell you that things are good. That thing, it's opening up is good for Carnival Cruise Lines, but at the end of the day, there's a lot of work to do, and we have a lot of work to do to help people not feel scared about jumping on a boat and getting locked on a boat for 2 months off the coast of Japan. Like that's still fresh in people's minds that, you know, there was stories and you're on a boat and you're sick and it's a disaster. So you got to think about the cost of running this. Sure, it's going to open up again and people are going to jump on the boats. But what is the cost of doing business these days for Carnival Cruise Line, for Norwegian Cruise Line? If it costs them, just throw out there, it cost them $1 to get you to jump on their boat, how much does it cost you today to get you on that boat? It might be 3x, 4x for all we know. The advertising dollars, the amount they're going to have to spend to get people excited about jumping on a boat, a lot more, let's just call it. So margins get squeezed. They're not going to be able to pack the boats that they did. Okay, same cost to run the boat, right? Maybe they cut down on some of the costs, but you know, you still want to have that same experience, which is going to cost the same dollar amount. And now you have to have less people on the boat because you just can't have the COVID stuff because of COVID regulations. So, you know, margins are going to get squeezed tremendously. So that industry, while we'll open, can it get back to full normality anytime soon? Probably not. So how they are, so if you look at my chart, how the world is, the market, the world is assessing the probabilities here is this right here is, you know, somewhat of a pipe dream for right now. It's not like Las Vegas Sands, MGM, although I think that's going to have the same type of margin trouble. But you have here a discount of about, let's call it 50%. It's 50% of normal. Okay, so people looking at it and saying, okay, that's the opportunity, but is it really? Like, then you have to do the digging and you have to use the math to say, well, here's your margins, here's this. The company's not going to make the amount of money they were making, you know, 2-3 years ago. They have a lot. They have insurance Imagine the insurance on these boats now that you got to take on. That's a big cost.
Right.
So there's a lot working against these industries. You got to be careful still. I think they borrowed money. I think they got some money, and I'm not sure they got to pay back. But there's more debt on these companies. So normal for CCL and NCLH may be about a 50% haircut until they prove themselves. Until they prove themselves to be really back to normal and start pushing the 40, 50, 60 levels. So these are things that you got to look at, and I think yesterday you asked me about
yeah, I was just gonna say I really like that way of thinking, and a question from yesterday was, how do you go about these things? What's your daily routine? How do you think about things? And then also, what was it like back in the day when you worked on Wall Street versus now?
Sure. So it's funny, but back in the day, I don't do. The long story short is do a lot of reading, but look, I'll tell you a story about back in the day. Back in the day, I was 20, call it 24, 25 years old. This is actually a good story. 20 is life-changing story for me. This story changed my life. And I was a 24, 25-year-old kid in New York City making decent money, hanging out with my friends. So it was one night. It was a Monday night. It's very clear that it was a Monday night. And it was 6 of us. We went out to dinner, and then we wanted to go to the hottest club in New York City. The 6 guys couldn't get into the hottest club in New York City. So what we did was we went there like 2 hours earlier, right? Because we were trying to get in. We were drinking. I think we had some sushi or something. We were drinking, and we got to this place, the China Club. China Club Monday nights, New York City in 1999 was like the hottest place to be. And so 6 guys get in there, and we're sitting around. There's nobody around, but the crowd starts coming in at around 10, 11 o'clock, really 12. The cool places in New York City don't open until 12, 12:30. So we're there. We're drinking all the way till 12, 12:30. And finally it starts really happening at about 2:30. By this time, as you imagine, there's so many drinks there. I don't remember. I don't think any of the 6 of us really remember exactly how we all split up, how it all went down. But I wound up on top of a car outside of I lived on the Upper East Side. I wound up on top of a car and woke up at 6. The sun woke me up, and I woke up and I was like all groggy, and I was like, what happened? I was like, oh, the China Club. I was at the China Club. And then I'm thinking, okay. And then people walking to go to work at 6 a.m. I'm like, I got to get some rest. Even though I think, I don't know how long I was sleeping on somebody's car. I go up to my room and to my apartment, and I crash. And mind you, it's Tuesday morning. I'm supposed to be at work at 7:30, but I was like 10 minutes. And the phone starts ringing, and it's 9 o'clock, maybe for about an hour. The phone's ringing for an hour. And when you're in you're in a dream and you hear something, it just becomes part of your dream. So the phone ringing became part of my dream, and I'm just sleeping. And then I wake up to the phone ringing and to the birds chirping. And I'm like, wow, birds chirping. Like, where am I? I'm waking up all groggy. I look at the phone's ringing. And I'm like, oh, the phone's ringing. It's been ringing for a long time. I pick up, and it's a guy from work. And he was clearly just had it on ring. And he, back then, I didn't even think I had a cell phone, but my phone was actually ringing. So I had an actual telephone. I pick up the phone. I'm like, hello. And he says, where are you? And I said, I'll be in 2 seconds. I was like, oh, I'll be in 2 seconds. I completely freaked out. I was like, oh my God. I ran to work. I got to work at 10:30. I get to work in the same clothes I was at the China Club with. And I sit down, and my boss, now on the trading floor at Bank of America, it was rows of people, and they just rose. So my boss is sitting next to me and just looks at me. He's like, you stink. And he just got up and he walked away. And meanwhile, a buddy of mine is named Kevin, on side, very good sales trader. He looks at me and he's like, did you have fun? Like, where'd you go? You reek of vodka, right? And I'm thinking, oh God. They send me home, and I'm thinking, oh man, this is awful. I say this because I was 24, 25. I really didn't have a process. I was just coming in, doing my thing, smart enough to figure things out. But I almost got fired the next day. The big boss brought me, the big boss, guy making tens of millions, brought me in, and he said, what are you doing? He goes, HR. He literally says, HR is waiting for you downstairs. And I said, I'm not going. I'm not. You can't fire me. I'm not going. And he's like, what do you mean? And I talked him into keeping me. And he said, fine. And the deal was every day. He said, what time do you get into work? I said, 7. Okay, every day you're going to give me an hour. You're going to think about me. You're going to give me an hour of your time. And I was like, thinking to myself, that sounds a little odd. You asked me to think about you when I wake up in the morning, but okay. So I'm just kind of going with it, whatever it is to keep my job. And he says, you have to be in work every day at 6 o'clock, not 1 minute later. And if you don't make it by 6 o'clock, then you're fired. And I said, there's nothing I could say. I said, fine, that's a deal. So made a deal and everything. And I was there every day for a long time at 6 o'clock, 5:45, 6 o'clock. And that's when my process started. And my process was, I would read the Bloomberg News. I would read Wall Street Journal. I would read the New York Times. By the time everybody was getting into work, or most people getting into work, I had already read most of the news. I had already absorbed what the research was coming out. I was reading out Bank of America research. I knew what was going on in the world, and I was sharper than most people. And it made me really appreciate how much, reading and absorbing different viewpoints and then putting them together to come up with your own story and your own ideas, how much that works. That process really, and my boss, John Sandelman is an excellent boss. It's a whole nother story. John Sandelman, he's great, and a very polarizing figure. Some people hate him, some people love him, but he's great. He really made me do that. Now, the funny part of that story is it was about 6 months later, and I woke up at 5:45. I woke up at 5:45, and I was there every day at 5:45, and I literally ran down Fifth Avenue, running, putting my clothes on, my suit, like putting it all on, just running, thinking I was going to get fired. I got there, nobody's at work. It's like 6 o'clock, 6:02, 6:03, and nothing happened. And he never fired me. And it just I realized then that nobody was ever even watching me. He just did that knowing the type of person I was, that I wanted the job and I was going to do it. But, the process is trying to absorb as much information and as many perspectives as you can. Everyone has a perspective of reading an article, right? So you can absorb what people are saying and then try to put things together. Now, I put more weight on the CEO speaking. So I tell people, make sure you look at the earnings transcripts. The CEO of the company, the guy with the vision, he's paid to have a vision. He's telling you what the vision is there. Do you believe him? Is it believable? Can you repeat that story, right? We talk about how something becomes viral. Well, in the financial world, it's viral if you can repeat the story. I buy Apple. I love Apple. Why? Because I have the iPhone and because my computer, and everybody uses Apple. Can't you just see it at the library? And all of a sudden it's like, yeah, buy Apple. It's viral by mouth. And so is the story repeatable? That helps. So, earnings transcripts, look, research reports too. They come out with a couple of stats, but we do that. And again, we're framing the overall market. We're looking at individual names. We're trying to absorb trends. We're looking, MIT, I think has a magazine that I think every once in a while I'll pick up, and they were talking about space and going to the moon and exploration in space. I think, I want to say 7 years ago, 8 years ago, maybe longer. Now, and by the way, you could have bought some of these space stocks, maybe 20 of them, years ago when they were nothing. And now some of them are through the roof. So the point that I'm trying to make is that there's a lot of different ways to take what you learn and make money. In this game, in the options game, it's a little bit faster. It's a little bit more of the here and now. And so we're trying to focus on what we're reading, how we're absorbing it, how we're connecting the dots. Steve Jobs says, creativity is simply connecting the dots. Okay, so I put as many dots in my head and I start creating what could potentially be a good story. Now, I don't just go what's in my head and saying, oh, this is going to work. I then follow the money, right? The money is where really a good part of the confidence comes in. Somebody's betting with their dollars there, and then they're telling you the story. That gives me more confidence than just reading an article that might have been paid for somebody to allow me to read it. Because I'm always thinking, how did I get this article and why am I reading this article? So these are the things that, when people ask me, what do I do on a daily basis? I read a lot, while the market's messing around and doing its thing. I'm watching, I'm seeing flows, I'm looking at this. But at the end of the day, I'm trying to read. I'm trying to find good art. Show me a good article. Tell me a story. Tell me something. that I absorb it, I hear it, and then doesn't mean I'm going to act on it immediately, but I want to see it. I look at technicals. Why technicals? Technicals are psychology. Somebody could be yapping about a great story, and then you look at the chart, it's a disaster, and you're like, how come nobody else knows this story? Or why isn't volume starting to pick up on like down days? So but the same story, and then you see a stock start to turn, and you see volume coming in. That gives you more confidence, right? Because you're hearing the story. Right. He's showing you that he's involved. You're seeing call options, and you're seeing stock volume. Now that story is starting to make a lot more sense, and you start to like that story. And again, I don't jump at every story, but I'm starting to, those stories I like better than the one where the guy's yapping, telling me stock's going up, and the chart looks like a disaster, and you read the earnings call and they don't really have anything new to say. There's no real, dynamic presenter there. So these are things that everyone can do. It simply takes practice. It takes practice, and then connecting the dots takes practice. So, unusual options activity is not just, unusual options activity, it's just unusual options activity. It's just a couple of numbers, a couple of stocks pop up. It's how you connect the dots between this, the charts, and everything else. So that's my story. I was 24 years old, almost got fired in my second job, but that lesson was what made me who I was during that time when I was, doing a lot of business, talking to the top guys in the world, talking to their hedge funds, and giving them ideas. The same ideas I'm giving out now. I was doing that on a daily basis. I had a lot more resources. When you're sitting there and you see, the guy sitting next to me is talking to, let's call it George Soros's fund, or this guy's talking to David Einhorn, and he gets an order. He's buying the banks, and this guy's buying the banks. Which way do you think the banks are going? Right? The banks are probably, there's something going on in the bank. So I'm looking at options. And so when you're sitting in those seats, you absorb a lot. Okay. I don't have that anymore. I can't, but by looking at the volume and the flow and how it's coming in, that's how I can make sense. I sort of transport myself back into that seat and say, how would this work? This would work this way. They would come in this way. 2 weeks later, I see them come in again. There's something, I know what's going on. How do you think, I'll give you an example. How do you think an idea goes from one hedge fund to the other? Well, one hedge fund gets in first, then he gives it to the next hedge fund guy as a gift and say, oh yeah, we like this. He's already in. And then the other hedge fund, if it's a good idea, they start coming in as well. And so when you see more and more people coming into an idea, what does that tell you? It tells you, I don't have to know the idea, but I know that the idea is probably good enough to get every one of these hedge funds coming into the name. So think about that. These are all logical things that I use, and from experience that I'm looking at. So that's what I would say. It's that my process is, I eat a good breakfast. I do meditation. These days, over the last 6 months, I've been doing meditation. I think it helps a lot. I again try to get some family time in, and I'm very busy, but I still try to make some time with the kids and do things that make me laugh. This is a stressful game. It's sitting in front of the computer all day is not really what, I'd rather see someone, if you're going to sit there, not just look at the tickers, just actually start reading good articles and good things. And everyone in this game, there's very smart people. I mean, you don't have to be an ex-Wall Street person to actually be doing this game. You're smart enough. I'm teaching you how to do it right here. And it's about reading and connecting the dots. And then if you have the beauty about what we're doing here is I can see from the comments that people are asking better questions. They're asking deeper questions, which means that they're learning, right? When I have to explain something and go to a higher level, that means people are learning. I'm trying to stay at a certain level. And then as this podcast gets more and more mature, go to another higher level and say, okay, let's change gears a little bit. This is what you can do. So we do it every once in a while, but look, that's the process and the long and short of it. Might have been a little long, sorry, but
no, I love it. Okay. It's great. Yeah, all right, awesome.
All right, good. All right, so let's get back in it. What else are we seeing?
What else am I seeing? I'm seeing CCJ too.
CCJ, yes. CCJ. I saw something there. What do we got? Some big call options
in April,
and really far out. I don't know if this is, you might want to check Swaggy Stocks to see if they're talking about this, but there's a lot going on here. The 24s and the 25s are trading. It's a, let's see here, 24.33 cents. They traded separately. And then the 25s traded in the morning here. So these were taken up. These were taken up. Looks like 72. 72 was this one. Traded at 23 cents. To be honest, I'm not sure. I'm not sure. I want to believe this one was bought. Okay, so I want to believe
Okay.
these 25 calls were bought. I see the 24s were, look here, 72 vol, 33, 71.8, 36. I think these might have been sold. I don't, it's hard for me right now. It's hard to understand what's going on here. I see two different trades. One looks like a buy, the other one looks like a sell. I think it's difficult to imagine that somebody wants to buy a 1.2425 call spread here. So I'd imagine that this could be buying here.
That's a new one. It just came in, right? The 24. Yep.
Yeah, the 24s. Yeah, there's something going on here. It's hard to make sense. The 25s look like they were a buy early in the morning. So they bought them at, say, 23 cents. Maybe someone just came in and did pay 23 cents and then sell these. Sorry, these are the 25s. So, sorry, pay 23 cents for these and then come in and sell these at 33 cents. It doesn't make sense. It doesn't make sense to buy these and then to sell these at 33 cents. So you take in 10 cents for the 29 to 1. I don't know why somebody would do that. By the way, to do that trade, you got to pay commissions. And on Wall Street, you pay $1 a contract. So they would have to pay $1 contract is a penny. So they're going to sell that for 10 cents and pay 2 cents in commissions. Right. And then to get out, they got to pay another 2 cents or 4 cents. It doesn't make sense.
Right.
It doesn't make sense. So you're paying paying 4 cents on a 10 cents call spread. I don't understand. So I'm not sure, to be honest. I'm not sure. It looked like it was a buy, like a crazy buy, but I don't know. That one is up for grabs. I'm not sure.
Yeah.
How about there's one over here I saw something in. What did you see?
Was it a semis ON? I think. Yeah.
Semis. Yeah, the semis. The semis. So this one looks interesting. April 16th, 43 calls coming in here, and they've been buying them up. Let's just take a look at what, talking about 49, let's call it 50. So 43 calls for 50 target stock price. So let's take a look to see if that even makes sense. ON. All right, so the semis have gotten beaten down, some more than others.
Yep.
Let's take a look at here, ON. Okay, so all the way at new highs. This is the weekly. Let's go to daily. Just we see what's going on there. All right, let's try to frame this. So we're talking about 1 year. 1 year ago, 26. Something looks like it's happening right around 35. 42. Is that fair? Kind of looks like this is a big run here.
Right.
On Semiconductor. I don't really know what they do, to be honest. I don't know what part of semiconductors are in, but we can easily figure that out. But just from looking at this, I would say 35 to 42. It's done this 39. So once, twice, 3 times. So 35 to 42, call it, is $7. 7 plus 42 is 49. So 49 is kind of what they're looking at. $49, $50. So I see what they're doing. I see what they're seeing. If I had to look at this doesn't look like a top. I'm not saying that it is or it isn't. It doesn't look like one. Usually tops look like this, right? Right? That's how tops look like in general. And bottoms do the same thing. This looks like it's doing this, which is different. It's more looks like a little pennant there, flag. So 35 to 42 breakout gets to 45. I could see it. I could see it. I like the trade. I like the idea of the trade. How about a little pullback in this market? Like how about give it to me back at 39 and maybe I get in, right? So that's what I would say for this one. Oh, and so I don't want to. It looks pretty good, and it's only $1, but I think that you get a little bit of a pullback, you'll be able to get these 42s closer to the same price. But yeah, it looks pretty good. So I mean, if you have FOMO, and I do, and I'm staring at these, and I'm thinking, yeah, maybe I buy a little bit and then just
By
wait.
1/3, yeah.
But yeah, right, just keep it as a placeholder. It looks good. I see what they're thinking. So, semiconductor, I'd have to take a look at exactly what they're doing and with on. I can't remember, but I know that this is trading well. Same type of chart goes up. It doesn't give it back, right? To me, let's look at something here. So I'm looking at. So you see here, this was a high. This was a high, right? High, low, low, and still the stock goes up. These are MACD diversions here.
Right.
Each time it's a MACD diversion. And every time it starts going down and you're thinking, okay, that was the diversion, it actually fights back up. It holds. And then once it holds, it starts going up. So this is, to me, Micron is a strong stock. When something is doing this, it's bypassing, your stop signs here. And you're saying, look, the MACD's coming down. It's giving it a chance. This going up and the MACD's actually coming down means that when the MACD decides that it wants to go up, what's going to happen? This thing's going to explode higher. So I look at Micron and I say, damn, that's a pretty strong stock. I look at AMD, which was a really strong stock until a little bit ago, but it held. What you got to love about AMD is, remember, we call this a brand new stock right here. When something does this, it's a brand new stock, right? This is huge volume, 200 million shares, 150 million shares, 100 million shares, boom, 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 real quick, and it ends here. And guess what? It stays there, and it holds to the penny, right? To the penny,
Right.
74, right? So if you're framing this at home and you've done this you've had 6 months to frame this. This line did not change for 6 months. Okay. This changed. Yes, we had a high here and then we just moved it up, but this didn't change. So when this stock is going down and doing this ABC here and then going down, frankly, I actually missed this trade. This is one I wanted to get in here, right around here. And, I couldn't. To be honest, this is the day I wanted to get in, and the next day it went down. I was thinking, okay, I'll get in tomorrow. And then I was writing the idea around here and I saw that it was pre-market up $2. And I just was like, ugh, like this is like impossible. It's going to be impossible to get in, to get out, so I would have been in here. I would have had to take a $4, drop here and scrambling and then to go up. So, but the idea is this line never changed in 6 months and it hit to the penny. And this is call this a new stock right here. That is a new beginning. It's like the stock is zero right there. If it breaks 74 and starts going here, it's going to quickly go right here. So we're not out of the woods yet. This is, you'd want to see this go a little bit higher. It traded well. It's been trading well this last couple of days because the CEO has spoken and they released their new product. That was yesterday. So the stock is traded well into that. So Monday, Tuesday from 80 to 84, we'll see what happens here. But, this is why framing is a good thing. And you spend your time framing so that when it does, you don't need me to come in and say, buy AMD. When we're looking AMD, we were thinking about calls up here. Remember all over here. Call buyer, call buyer, call buyer, call buyer, call buyer. They were thinking what? Call buying. They were thinking 120, 130. Yeah. Right. So now the thing's 74. And you know what? I'm reading articles saying the thing's going to 60, 58, 54, and it's like, wait, there were articles over here. It was going to 120, 130. So, again, if you just figure out a way that makes sense. To me, this makes sense. I draw straight lines. I'm framing this. When I see big volume like this over here, and I got X marks the spot. This is zero. It holds. I'm doing nothing but trying to catch it right here.
Right.
Make sense?
Yeah.
So they're just semis. I mean, they're just semis. Look, this AMD is not the strongest semi. This is what we said held, yes, but this 50-day moving averages has come off a little bit. You've had a rounded top. It's not the strongest. Like Micron to me looks a lot stronger. This looks like it's got to do some work around 82 to 95 again, just to kind of blast through, is what it looks like to me. But on was the name, semis. Just look at all the semis. They're all trading. They all got smoked. Here's a gift for you to look at. This Sony. I like this Sony. I wish I would see some call buying in this name and it would get me in. But instead of giving you Felix's ideas, this is a good stock, Sony. I would suggest you go read the earnings transcript, read a little bit about Sony. Sony's a good stock. I'm looking for call buyers to step in the name.
Cool. Nice.
All right.
Definitely one I like.
Questions?
Yep. Questions. Let me see. Yeah, we got one that I liked. Okay, here it is.
Aren't options in such a post-COVID volatile market far riskier than stocks, since you can definitely have a loss of premium as opposed to only a loss if you sell the stock? Okay, great question. I would say, I think, and for people that just come in now, I think what's important to understand is that, because I do see the more videos we put out, the more questions we're being asked about, is this a good buy here? Do I buy it now? Do I sell it now? One, I don't know where a stock is going. It's not what we're doing here. It's very important to understand that. My guess is just as good as your guess or anyone's guess. I don't believe anyone in the short term knows where a stock is going. What I would say is that because we're looking at options is about risk reward, and I would say that there is ways to find great risk reward, which is what we're showing here. And so I would say that there's always great risk reward out there. There's always opportunities, because it's not about up or down, and it's not about the high volatility or low volatility. High volatility. If you put, first of all, at Options Geek, I've taught you how not to put so much emphasis on implied volatility in the Greeks. It's not necessary. Whether or not implied volatility, implied volatility, I can understand using as a gauge. When I see something trading 200 volatility, that's okay, that's high, and I got to sharpen my pencil. But that option is 200 volatility because the stock is trading 30, 40% a day, or 15% a day, and it's got to be that high for the options for people to even sell you anything at that level. So, I think it's important not to get stuck on implied volatility, on volatility, or on the Greeks. It's not the way we should be looking at it. If we're playing this game, we're looking for great risk reward. We're looking for, where can the stock go first? The stock, not the option. Where can the stock go first? And wherever the stock can go, tell me what the intrinsic value of the option will be. Okay, if the stock got there, forget about the premium, the time value on top of that. So once I take that time value out, and if something moves pretty significantly, that time value goes to almost zero anyway. So I just took out the time value. The Greeks are only in that time value portion. So why am I going to analyze and spend 10 hours trying to analyze what the Greeks might be if the stock goes to a certain level, when I could just take that out of the whole equation and think of it as just a bonus when I buy options? So, just because volatility is higher, we might be in a higher volatility regime for the next year and a half. That doesn't mean that we're not going to find any good opportunities to look at options. So high volatility only exists if the stocks are moving at these high volatilities. Otherwise, the market's going to start selling them and they're going to come in. You could see some of these names already have they on one side of the mountain. We talked about this yesterday. On one side of the mountain, where every day is a new high and people are just, there's new money coming in at new highs. There's nobody above to sell, right? There's nobody above that's at everybody that comes in new. There's a buyer. There's no high, meaning that people are betting against on the stock. The volatility explodes because nobody knows how high this can go, right? There's no stop signs above, right? You're on a freeway and it's just going, it's momentum. When you get on the other side of the mountain, you have this whole history behind you that they, it was $100 stock. Now it's a $50 stock. And guess what? There's people now willing to sell at 60, at 70, at 80 and 90. Those are stop signs now on the way up. And so implied volatility probably gets dampened on the right, even though it's probably more dangerous on the right side of the mountain. The volatility might even get dampened because the range of where the stock could go has gotten dampened. Because can it go to 100 again? It can, but it's got to get through 60, 70, 80, all those people that want to sell. That dampens the volatility to guys like myself who would be trading, who might be trading volatility at a bank. Right. Okay, so you gotta think about that and understand that. But as far as feeling comfortable buying options, in a high volatility environment, you got to be. I think you got to sharpen your pencil, and you got to understand what you're doing and what you're looking for, and you got to really ask yourself, can the stock get there, and have reasoning. But as far as I don't necessarily look at, when it's low volatility, what that means? The stocks don't move that much. So some people think, is it harder to make money in the low environment or in the high environment? I'd say it depends. It really does depend. It's very stock sensitive, but I would say that in the high vol environment, I get a little bit more gun shy. Because these things are moving so fast that there's a lot more to it. So what I tell, the trick that we've been talking about, where you're just layering into it, it comes more into effect in a high volatility name, because I don't want people, you can get stopped out on a 100 vol name, you get stopped out quickly and then it shoots up. So long answer to that quick question, but I would say that less focus on the implied volatility, less focus on the Greeks, and more focus on where's the stock going? How's the stock going to get there?
Yeah. Good.
Okay.
Great. Thank you.
Cool. What else? I said there's one more question I just took here. How do you feel about high volatility versus theta? Same thing, Sean. I would say, don't worry. The theta, these are concepts, and I mean, on 3 steps that should sort of show you how to look at it, and they're concepts. I take the Greeks in 22 minutes and give you all you need to know about it. But I think that if you're a seller, I mean, the theta is just a number. These Greeks, they're just numbers on the screen that tell you sort of, hey, if the market doesn't move, if the stock doesn't move, then tomorrow it's likely that you're going to make this much on theta. You might lose on Vega, but you're going to make this much on theta. And so, you got 5 different things. It's a 5-dimensional puzzle. I would say that it's frankly, I don't think it's worth your time, because if the stock actually makes a big move, none of it matters. None of it. Okay. So, that's what I would say. Don't get too focused on that stuff. I don't care that there's a million videos on YouTube and all the gurus are talking about put anyone on the podcast. Maybe we get one. Nobody really wants to be on it, because I'm going to ask the same question. Well, what happens if the stock shoots up, and how much data do you have there? It doesn't matter. It actually doesn't matter. Oh, well, in that case, well, then it doesn't matter. I know it doesn't matter. Right. Okay. And that's why when I say that the top guys in the world, they don't think about this stuff. Like, what's my theta today? It's like, I bought an option for $1. Who cares? It's going to go to 0. I know if it doesn't work, it's going to 0. So who cares what my theta is right now today? But if it works, it goes to $6. Say I make 5 to 1. That's what I care about.
Exactly.
Right.
Yeah.
And then you got to figure out the risk reward. He's also thinking about the probabilities of it getting there. And so that's what the new options chain does. That's what all these things do. So.
And that's the beauty of Options Geek. So guys, make sure you like and subscribe and share us. And the more people we get, the more tools we can give you, and the more we can all grow. So why don't we jump into commodities, Felix?
Commodities.
Yeah, I've seen some
somebody
tech.
That tech is interesting. Like, it's popping up again. Who was it? I think it was Brenda. She was saying the tech. It's been on my radar. I've been watching TECK. TECK resource, natural resource name. Big volume coming in here today. The 25 calls, 30,000 times. Stock looks like, wow, stock just jumped up. Look at this. The stock just went from 20. Oh, okay. Stock just jumped $1 here, 5%, but middle of the day. So yeah, I mean, we saw call buying earlier today, but now there's even more call buying here. And I don't know what's going on in the name, but what's interesting is that there's call buying, but the stock is down. So that's one sign. But I've been looking at this, and it's frankly, the truth is, I don't like the chart the way it's looking right now. There's something about this chart. Let me see if I can sort of vocalize what I don't like. It's hard. It's not that it can't go up. I'm not saying that. I wish it was a little bit different, but I'd like to see, you see how this jumped here and then they sold it. So you have this, so it was sold hard here. It made this jump here and it's coming off the last 3 days. Have a little bit of a MACD diversion here. Remember, MACDs don't always work. Diversions don't always work, but we have a high here and not a high here after a long run, right? So you got this long run, and then near the highs, you start getting, if I see a MACD diversion, it makes me a little bit nervous. So I'm a little bit nervous about the chart, just looking at the chart, frankly. I see that something like, we talked about this one over the last 4 weeks, FCX, this is also something, again, now, like I was looking at the MACD over here. Let's take a look at it. I was looking at the MACD over here, but these things have been so strong that it hasn't been, sorry, it was over here. See this right here? So it was rejected here at the high. So here was a high, price high, MACD. Then it went here, broke the high, and then came down through this level. See that? That high came through. So this MACD, we were right here. It looked like a MACD diversion. So, and we saw people, I think it was BlackRock here hedging around the 29 level, right? And selling calls around 35 level. And so I thought, okay, I like it. We have a big guy probably selling some stock here, actually trying to buy puts, and it held. And you see what happened. It held here, jumped, and then made a new high. So now we have this whole run here. So this is the new high, and it is a new high in the MACD, right? Then just a couple of days ago, we were here, 33, and I told you that I thought it would make another run at the high simply because you have a high MACD, and and it came down. Usually it tries to go after this high again, usually. And it did. It was up $4, about 15% from really where we were looking at it. Call it $3.50, call it 10%. So it made this move, but now it didn't make a new high, and this is also not making a new high. So you have a little bit of trouble here, and this is one of the primo commodity names, so Freeport. So I would say that for whatever reason, commodity seems like it's coming off a little bit. You have like let's look at the Exxon of the world. Again, having a little bit of trouble after a big run. It's not that people are getting out and the story's completely over. The Exxon has gone from 36 to, let's call it 31 in November, 31 to 62. It's doubled. This is Exxon Mobil. This is some big boy stock here. So at some point it slows down. So maybe this is just the next 2-3 months of consolidation before taking another move higher going into the back end of the year. Is that fair?
Yeah, definitely.
Okay,
great.
So that's what I would say. Commodities is just they're. It seems like remember how EVs were taking a break. It seems like commodities have made a huge move. It seems like they're taking a little bit of a break here over the last couple of weeks.
Okay, cool. One I'm sure you like, Starbucks. I've seen some action today in Starbucks. Yes.
Starbucks. I haven't looked at Starbucks in a little bit, but I do like Starbucks. Starbucks, anything with brand name and lots of customers, I like. So chart looks pretty good. See how it's let's go look at the weekly. Okay, so I think we could just draw a couple of clear lines here just to frame what we're looking at. But this is 95 seems like it's the line in the sand. And then it's just broken through 107.5. So 7.5, so 12.5 plus 12.5 plus 107, call it 120. So probably next stop 120. Yeah, I mean this has broken through coronavirus, trading at new highs. They open up more stores. Again, how is this worth a lot more than it was, or maybe it should have been worth? It was, see this going into this, it was probably doing well. Yep. See, this is before coronavirus. It held here. this hadn't done anything for a very long time, Starbucks. So keep that in mind. It made its move, and then it looked like it was going to be doing this. Let's use our imagination. It looked like it was going to be doing something like this. So, it was going to go up. It was going to do its dance for a few months, and it's going to explode higher. It looks like in the meantime, it broke here, and now it's trying to do that same dance where it's going to break higher. So 45 to 95 is 50. 50 where it first stopped here plus 80 can get me to 130. So 50 plus 80, 130. So 130 stock. Again, market's got to be good. Everything's got to be working. But, that's sort of my initial is 120, 130. So what are we seeing in the options?
We're seeing April 115, 110. Sorry.
Okay, so the April is only a few weeks away. So April 16. So what if I put 120? Gets me right around to the 110, 115s. Okay, so they're thinking somewhere, maybe even not even 120. Call it 118, 120. Well, there you go. 118, 120 Starbucks. I could see it. 95, 107.5 minus 95 is 112 is $12.5. 12.5 plus 107, just double it, is 120. I keep it simple. Sorry if to me that's this. I just like keeping things simple.
Right. Nice.
So I think I've always liked Starbucks. Again, it's just a name that to me, big brand, a lot of customers, lots to do, get good management in there, and they figure stuff out.
Nice. Good. I love it.
Anything else?
You want to call it, or you want to run a few?
Call it a day. We'll call it a day, and then we'll see. Let's call it a day, and we'll one thing to look at for. I'll tell you one thing to look at. Ford. There's some Ford puts out there, and keep an eye on Facebook. Maybe we'll talk more about Facebook tomorrow, but just keep an eye. I'm going to keep harping on the Facebook. There's something going on there. Facebook, Ford puts, and anything else you see, you could throw out something people can look at.
Ford puts and Microsoft as well.
Some Microsoft calls. Okay, good. Yep. We'll talk tomorrow.
All right, sounds good. Thanks, Felix. Thanks, everybody. Make sure you like the video and subscribe if you haven't. We'll talk to you tomorrow.